there, welcome back to the Indian Insight channel. In my last video where I covered what sectors you should invest in 2024, I also talked about Nifty. I talked about the channel shown here, and I said that we are at a crucial point, a point that can be a turning point for Nifty. And if we survive this, we can probably expect the market to go to 23,587. And if not, then we may see a correction from here. We are still trading around this channel. Last week we saw a brief panic fall in the market, and if a correction develops, then you can extrapolate that fall further and expect much more damage across the market, assuming that a fall occurs going forward. So it becomes important that you position yourself correctly, that you follow strict risk management, and if you're not comfortable, then you should lower your risk in the market. And any position you are holding currently, you should be doubly sure that you want to be in that stock at the price at which you have entered. These are the times when the risk management needs to be tight. If you have a stop loss in place, make sure that you get out of the market as soon as those stop loss hit. If you are taking new positions, make sure that you have a stop loss in place. If you have long-term positions, then of course I would expect that either you already have substantial gains in those stocks, or if they are new investments, then again you should have a stop loss for them. So for long term positions, maybe you can continue to hold, but otherwise your risk management should be very strict, because whatever happened last week will look mild compared to what can happen whenever the correction develops in this year. Further, in this week, there has been a price action that I think you should be aware of. This is the weekly bar which has been created. This is typically known as outside bar. Some of you will also like to call it a bearish engulfing pattern. But I'm here because I want to talk about outside bars. There is a slight difference between an outside bar and a bearish engulfing pattern, in the sense that an outside bar can also be created without a substantial black body. So if this candle was a doji, then also this pattern would be an outside bar. What is an outside bar? Basically, an outside bar is a day or a week, basically a candle, where the price range of the candle is higher than the price range of the candle preceding it. So if the price range of the candle is longer than the price range of the candle preceding it, then we refer to it as the outside bar. Now I want you to look at what happens when outside bar is formed on weekly charts of Nifty. So for that purpose, I have added a outside bar finder here. So on TradingView, I go to indicators and look for outside bar finder. So this is a script created by someone from the TradingView community. We are using it. You can use other scripts also. I'm just using it. So I'll apply this script, and it will show me what happens when various outside bars are formed. I only want to look at the bearish outside bar formations for now. So I will go to settings and make some changes. So I only want to look at the bearish price actions, because already this trend channel is a key resistance for the market. So we also want to see if there has been some further bearish development. So we should be doubly cautious here. So these are all the various outside bars that have occurred on weekly chart in Nifty. This one outside bar was created, but the market didn't break below the crucial low here, and there was a reversal from here basically, and prices went up. Same was the case here. The market never went below the low of the outside bar and instead reversed from here, and we saw a substantial move. Same was the case with this outside bar. The market never closed below this outside bar, and so we saw a substantial move. In this case, when the market was able to close below the outside bar, we saw a substantial move. We went from 17,493 to 16,850, so a 4-5% kind of move. Here also outside bar was formed, and here the market went from 18,350 to 15,671. So that was close to 8 to 9% move. Another outside bar was formed here on weekly charts, and again we saw substantial fall. Here is another outside bar. The market didn't close below the low of this bar, so the market was able to rally up. Here the market closed below the 14,459 level. We saw a fall of 3% or 2 or 3% kind of fall. Another outside bar was formed here, and from 14,898 to we went to 14,248. So again 3 to 4% kind of fall. This was another outside bar, and we fell from 14,222 to 13,596. Again 3 to 4% kind of fall. So what I am seeing, and what I think you will agree, is that whenever outside bar appears, there seems to be a substantial movement in the market in the coming weeks. Here again from 11,300 we went to 10,790, so 4 to 5% move. Here again we see that once an outside bar is formed and the market failed to close below the low of this bar, we saw substantial rally in the market. So broadly what we can expect is that when an outside bar is formed, in the subsequent weeks, when the market breaks either the high or the low of that candle, then you can expect a substantial move, say at least a 3 to 4%, or maybe even a bigger move in the coming weeks. And this is why I want you to track the levels created last week very closely, because the subsequent week movement you may be able to predict by just looking at what the market is doing, whether it is breaking these crucial levels, which is 21,285 towards the downside and 22,124 towards the upside. So this 800 or 900 point range, wherever the market is able to break, it is going to move by at least 3 to 4%, maybe more, maybe 4 to 5%. So it would be at least 1,000 point move that you can expect once the market breaks above or below the crucial levels created using these outside bars. Subsequently, once the January expiry is over for options, so around after January 25th, that is, I'll be posting another video where I will do an OI analysis for the February series, and there we will probably get more clue as to what we can expect in February. But for now, we have created crucial levels in the market, and based on these levels, you will be able to position yourselves correctly in the weeks ahead. With that, we come to the end of this video. I hope you liked it, and if you did, please remember to subscribe to this channel and share this video with your groups, with your friends, and help us grow this channel so that I can post more videos for you in the future. Thank you for logging in.